8 ways to check if it's a token scam. Although the rapid expansion of the cryptocurrency sector has resulted in the creation of a slew of new billionaires and success stories, the current market is not without its share of challenges. Criminals operating online have profited from the widespread desire to get wealthy quick by taking advantage of the popularity of cryptocurrencies. This has opened the door for many crimes involving cryptocurrencies, such as fraudulent tokens. What is a scam token? Scam tokens are digital currencies issued with the sole intention of defrauding investors of their investment capital. Because it is simpler for a cybercriminal to accomplish this rather than construct a full blockchain, these are frequently developed on top of a blockchain that already exists, such as Ethereum. This is done because developing a blockchain from scratch is more difficult. In most cases, a vehicle for a rug pull is constructed in the form of a scam token to facilitate its execution. In the most common form of this con, the project developers suddenly abandon their work and flee the scene, taking with them the money that investors have invested in a token that they believed held some potential. Swindlers can easily generate and market tokens without license or credentials because cryptocurrency is extremely unregulated. This makes it easier for them to commit fraud. In the world of cryptocurrencies, a token can achieve massive success in a matter of days and continue to be highly profitable over the long term. Hence, investors frequently hunt for assets that are expected to experience a sudden and dramatic increase in value. Let's say the price of a cryptocurrency was $1, but it is widely believed that this price will skyrocket very soon. An investor might purchase a small or large quantity of these tokens. If the token's value improves, the investor can make a significant profit by selling the token back to the exchange. Some investors are seeking investments with a longer time horizon, and they have faith that the value of a cryptocurrency will continue to rise over time. However, many investors have been defrauded by fraudulent developers or criminals pretending to be legitimate developers. A token scam can ruin a cryptocurrency project with real potential and profoundly affect the market, but it can also have a devastating effect on those involved in the project. A token scam can eat away at the credibility of established cryptocurrencies. It could even damage their reputation because it is common for well-known projects to be linked to fraudulent tokens. Ways to check scam token. Research the developers. One of the first things investors should do is conduct basic research into any blockchain project's developers. Typically, tokens are developed by a single individual or company, and investors should be aware that these projects are typically more likely to fail. If there is a team behind a certain cryptocurrency, investors should look up their credentials to ensure their reputation is unblemished. Investigate their backgrounds on LinkedIn or other social networks before investing money in a cryptocurrency project. Check the crypto's price history. Even though the crypto market is still in its infancy, many established cryptocurrencies have already demonstrated impressive gains during the past few years. As of this writing, Ethereum has been experiencing impressive gains and has exhibited very strong growth since its launch in 2015, making it a favorite in the digital currency scene. Investors should look up the history of a cryptocurrency before investing any money into it to make sure that they are buying something that is not too far removed from the current value of the cryptocurrency. Check the exchange on which the token is listed. These exchanges are generally safe platforms for storing digital assets, but it is still best to check that the exchange is reputable and worthy of trust. Investors should conduct background checks on the exchanges through which they plan to trade digital assets and ensure that these platforms are legitimate. Some exchange platforms have already been hacked, some have gone out of business, and others have revoked their licenses. Consider the token distribution. It is important to note that the number of tokens in circulation directly influences the price of a cryptocurrency. This means that investors should be cautious in their research and only invest in a token if a reasonable amount of tokens is distributed and it does not appear to overpromote the project. Check the white paper. White papers are the rudimentary documents that cryptocurrencies generally require to function. White papers must provide all the basic information the investor needs to verify that a project is legitimate. A scam token will have a white paper containing misleading information and will not adequately address the fundamental concepts. The scammer might also need to mention the token's terms and conditions, Or they might place too much emphasis on them to discourage investors from trading their tokens. Check the token's roadmap. An established cryptocurrency will always have a well-developed roadmap detailing the future of its blockchain project. This roadmap should outline the steps to develop the product and how it will affect the existing platform. An investor should be aware that a token scam might omit any information about a roadmap, making it unclear how long it will take for their token to be listed on an exchange. This can also lead investors to assume that the project is necessarily fraudulent because if they have no clear plan, then there is no reason for them to have any tokens in circulation. Extreme marketing. Scammers often spend a large amount of money promoting a certain cryptocurrency because they know that the market is extremely competitive, therefore, they can gain an advantage over other projects by spending huge amounts on marketing. If millions of dollars in advertising are spent on a particular project, then it will be easier for them to compete with other projects if they spend some money. A scammer might also need to mention that their project's credibility is based on their website or social media accounts. Conclusion. Investors should be aware of risks when purchasing a cryptocurrency because the market is still largely unregulated, and scammers can easily steal their money. There are many ways in which someone could scam an investor with a token, but there are also many ways to do the research before making any investments. By ensuring investors conduct the proper research before they make any investment, they can greatly reduce their chances of being tricked by a fraudulent token scammer.